welcome everyone to episode 41 of the Brandon Adams podcast. I have with me Twitter personality and financial Twitter star Doomberg. Doomberg, how's it going today?
Brandon, it's going great. Great pleasure to be here. Looking forward to the discussion.
So you have created the Doomberg brand from scratch, and you've ascended in 9 short months to 40K plus Twitter followers and one of the most popular economic substacks out there. Was this plan long in the making, or did it just gather momentum and you kept rolling?
Yeah, so we're a small team, and we, as background, we sort of had our own consulting business, which, as we revealed on other podcasts, took it in the knees on during COVID, like many small businesses. COVID crushed many small businesses, and it certainly crushed ours. We lost, I think, 85% of our revenue. Most of our revenue was from public companies, and consulting services are variable costs that are quick to shut off during times of crisis. And we had a pretty concentrated customer set, and so we had to reinvent ourselves. And one of the things that we reinvented ourselves around, based on a tip from a good friend who's a pretty famous hedge fund manager, he recommended we look at the content creation business that feeds into Wall Street and to see whether or not our business expertise, including branding and sales development and marketing, might not be useful to people who do that for a living. And that led to a creation of an entirely vertical for our business. And we help many people in the space, and we learn the space, and many of our clients encouraged us to do it ourselves. The old saying is those who can do and those who can't teach, and our clients felt that we were teachers who could do. And so we planted the Doomberg brand. It's actually been about 11 months since we started. We launched in May of last year. We're approaching 40,000 emails on Substack, and I think almost 60,000 followers on Twitter. Twitter growth has been pretty remarkable, especially this month. But mostly, to answer your question, I would say it is first of all, it is my personal passion, and second of all, I have a very strong team supporting me in the pursuit of that passion. It's difficult to put as much time and effort into something unless you love it, and I personally love writing these pieces. They don't feel like work. When we started, I hesitated it and wondered whether we would run out of things to write about, and we're approaching piece 100 here, and still going strong. It's been really amazing. We've been free from the onset, but we're converting to paid next month, and that's the sort of next big phase for us in our journey, is to create this into an actual business that becomes hopefully big enough that it's the only thing we do.
Yeah, I'm surprised it's taking you so long to convert to paid. I look forward to that. I'll definitely be a subscriber. I'm sure many people I know will be as well.
I appreciate that.
I wanted to start with the topic of general interest, which is crypto. You had a very popular piece recently called Dollars Ex Machina, and you talk about basically the crypto macro economy, and you don't necessarily take an instance on it, but you come down quite pessimistic on the industry. Are you able to overview that piece?
Yeah, sure. We wrote a piece called Dollars Ex Machina, as you referenced, and in that piece we began by telling the story of our own personal investment in crypto all the way back in 2016. We had made an equity investment in a startup that was working in the crypto space, and we didn't really know anything about crypto back then, and I would suggest many in our demographic didn't. But that investment, which we watched soar from a nominal investment, I believe we took the minimum allocation in the seed round, and it soared to, I think as we described it in the piece, several multiples of our net worth, only to basically grind to a halt and ultimately zero out. And while we were sort of investigating the crypto universe as a consequence of this dabbling of an investment that we had made, we sort of made this mental model of drawing a circle around the crypto universe, and then we tried to follow the fiat. So how does currency go in, and then how does currency come out, and what's going on inside of the crypto universe that sort of increases the net amount of currency that investors could take out. And we came to the conclusion that if you ever wanted to take out your money, essentially it is the word we use is a Ponzi scheme. And we have not yet found a articulate rebuttal to that mental model. And the piece went on to describe how some of the big names in the space have created hard pipes of fiat obligations out of the crypto universe, such as Michael Saylor at MicroStrategy, which we had written about in a previous piece called The Drunken Sailor. But I would say, we are not strident in our writings about our negativity towards the crypto space, but we are certainly no coiners. Nobody on the Doomberg team has ever purchased a cryptocurrency. We don't have a wallet. It's just not a space that we understand enough to participate in. And the core of that piece was just sort of presenting our follow the fiat model and provocatively describing the sort of crypto universe as a circle, as a bit of a Ponzi scheme, where it's impossible that more fiat could be created inside than is put in. And then when you subtract out sort of theft and hacks and the need for mining, for example, with Bitcoin, that creates real fiat obligations. You can't yet pay for your electricity in Bitcoin. And so there's this sort of, you always need fresh investors coming in order for old investors to cash out, which is sort of the classic definition of a Ponzi. And so that was the piece that we wrote.
The take is essentially that if you invest in a quality company, there's a productive function where they're transforming inputs to outputs. And in the case of crypto, you're making the argument that the production function is sort of negative, where the inputs are exceeding the outputs because of the deadweight loss of mining.
And among others, theft is a big part of the, theft and fraud and scams and rug pulls is a huge drag on the fiat floating around in the crypto universe. But our main thesis in writing the pieces that we've written about crypto, and we kind of stayed away from crypto because it's kind of intellectually too easy of a growth hack to just write about crypto and take a polarizing stance and, get one of the two camps to come and row the boat for you. So we participate in the crypto debate, but we're nowhere near what we would consider thought leaders. But at its core, our main thesis is the U.S. government is corrupt, and the U.S. government has power over the populace. And one of the main means by which it expresses that power is through control of the dollar. And the banking system, anti-money laundering, know your customer. These are significant levers of power for a basically corrupt regime, and they will strike back. And they're not just going to let the crypto universe undercut them. And our belief is, we wrote a piece called the crackdown, the SEC crackdown on DeFi's is coming. They will crack down on this. You're seeing it already. I believe, for example, that the headline that crossed yesterday that Russia would allow friendly countries to pay for oil and Bitcoin is going to be used by the U.S. authorities to make a severe crackdown on the entire space. And our main point in writing these pieces is to just sort of warn our readers, who would probably be majority no coiners and perhaps interested in speculating, that at least be mindful that there are countermeasures that are almost undoubtedly going to be deployed. And I wouldn't underestimate the power of the U.S. government or its desire to control the money supply.
I would largely agree with you there. It's a competing power structure. Tether is one of the instruments that sort of connects fiat with crypto, and every once in a while controversy will heat up there and then it will die down. And it usually dies down because quite reasonable individuals like, say, Sam Bankman-Fried will come and say, look, the reality is that in the market, people who actually have something at stake and are trading these things value it at close to $1. And it's been that way for a long time. And so that's just the way it is. It is true that the holdings are largely unknown, but by the same token, the most knowledgeable individuals are willing to take it at close to face value, at close to $1. How do you view the Tether debates?
I come down pretty significantly on the side of Tether is a provable fraud. And I think I sort of view it as a test of people's intentions, whether they can recognize what Tether is. And I won't sort of get into too many of the specifics, but it is inconceivable that Tether has anywhere near the reserves it claims. And my belief, personal belief, and the belief of many others, and that I respect in the field, is that it's largely a counterfeiting operation that is propping up the price of Bitcoin, and that the people involved and who are the most intimate with it, if they can't see that, or they refuse to see that, or they know it and they say otherwise in public, then that's on them and their legacy and their reputation for history to judge when this all unfolds. But an entity that has been barred from doing business in the state of New York because of a settlement with the Attorney General of the state of New York, that claims to have some $82 billion in reserves, but has had a long history of struggling to find banking. $82 billion is a lot of money. And the Tether situation is sort of the Rosetta Stone through which we view all participants in the crypto space. Not sure if that was the answer you were looking for, but it's the honest one. It's the one we believe, and it's the one that we think in the next several months. And in fact, back to my previous answer, if the U.S. government is looking to use the Russian headline as cover, we think the mechanism by which they will begin to crack down on Bitcoin will be through the Tether fraud.
That's an interesting take. So Tether, in your view, is sort of a central bank, a de facto central bank of crypto that sort of prints Tether from thin air to stabilize the market.
Here, let's do this. Follow the fiat model. And if this is the angle that you want to go down, I'm happy to do it. So imagine Brandon deposits fiat in a exchange overseas, and I don't know, let's say $10,000, and they credit you with 10,000 tethers, so that now you can go and trade. That fiat is deposited on the exchange. The next step is they induce you to trade with leverage. So there's massive amounts of leverage, especially in sort of under-regulated exchanges. And let's just assume you're going to trade the price of Bitcoin with 10-to-1 leverage. Those exchanges know your positions, and let's say some of them are not super ethical and they have a sketchy track record of participating in Ponzi's. And knowing that they have a certain book of business that's loaded long or short, they allow the people who are allowed to basically print Tether to swing the market around and trigger stop losses and liquidations and cascading liquidations and waterfalls. And so now you are 10-to-1 levered. The price of Bitcoin, or pick your favorite crypto, moves 10% against you. You're wiped out, and you think that you just lost your $10,000 in fiat because of a bad trade. But in reality, that fiat has just been siphoned off by people who are doing wash trading and counterfeit printing of the currency that is the underlying trading vehicle. And I think there are many, many, many victims of this. I don't think it's actually arguable. I think it's pretty plainly evident that this is the nature of the scheme. You see, and then of course, all you need is to arbitrage across multiple exchanges to give the perception in the U.S. that Bitcoin price is liquid and you can easily move fiat in and out. And I know that you can do that in the U.S., but our belief is that, if 70% of the volume is traded in Tether, and Tether is basically, not allowed to operate in the U.S., even though they probably do, then of course this is all just driven by multi-exchange arbitrage. But hey, that's just our belief, and we're no coiners, and many people have written this. This is sort of a hotly debated topic, and I suspect that it is almost impossible to convert one person from one camp to the other. That people have just sort of settled on it. They see what they want to see, and so the return on effort in the debate is pretty minimal, in our opinion.
Yes, I agree with you, and I like your take that talking crypto is a shortcut in financial commentary, because it is true that it kicks up engagement a good bit. And I think, honestly, it's corrupted economic and financial commentary a lot, because I think people who are in the business of selling newsletters or selling subscriptions of any kind, there's just such an incentive to talk about crypto, because it pushes their numbers. And moreover, there's such an incentive to be in the long-term bull camp that it can corrupt their analysis quite a bit.
Yeah, and I get that. And also, I do think many of them are true believers. One of the reasons that we don't read a lot about crypto is because fighting a cult is a negative sum return in your personal life, and it's just there are other people who. And by the way, like as I said at the beginning, like the authorities are going to crack down on it. We're not huge fans of, and so we're kind of like neutral in the fight. We sympathize with the desire to create anonymous money. We sympathize with the desire to be able to transact in private. We sympathize with the desire to have a means of creating, storing, and transacting in wealth that is out of the reach of tax authorities or corrupt government officials. For example, we wrote a couple of pieces on what Justin Trudeau has been doing up in Canada and freezing the bank accounts of protesters. And then we wrote a follow-up piece called What Canada Means for Crypto, where we also basically made the point that through the same lens that we analyze crypto, one must also analyze gold. And we have a lot of gold buggers amongst our readers. It probably wasn't the best for our quote, the click aspects of our business to put that out there, but it's what we believed. And it's what we believe Justin Trudeau's behavior in Canada showed, which is unless you can buy things that you need to live, it's not money. But through that lens, crypto is not money, and neither is gold. They are speculation vehicles. They are interesting technologies, but they aren't money. Gold is a store of value, but it fails the medium of exchange test for money. And if you were a trucker in Canada whose bank accounts were frozen, your American gold coins could be bartered. But if you've been reduced to barter, that's the exception that proves the rule. You literally have no economic freedom, and the amount of Bitcoin you have in your cold storage wallet or the amount of gold coins you have in your safe weren't going to help you when you needed it the most.
You have developed a personal investing strategy, which is quite idiosyncratic. You've described it in another podcast as earn in fiat, save in real, and invest in businesses that you can control, or that we can control, as in the Doomberg team. Could you explain this philosophy a bit?
One of the things that we have learned through our studies and in our business and through writing the Doomberg pieces is that it's actually quite difficult to trade stocks for a living and do well at it. The vast majority of people who day trade, for example, are money losers. And given the stacked house dynamics that we just described for crypto, that would make no sense either. In our opinion, the people who are making the most amount of money in crypto are the people who are either the earliest to Bitcoin and when Bitcoin was literally worthless, had accumulated some and are sitting on a valuable stack today. Great, congratulations. And if I were in that position, I would be actively dripping out as much fiat out of the system as I could. So if you can't really day trade for a living or beat the markets, because the market is corrupt, your alternative is to invest in passive vehicles like the S&P 500 index fund, and that's fine. But for us, we have found, given our sort of unique consulting firm and our industry experience and our managerial abilities, that the very best way for us to create alpha in our investing, in the investing portion of our net worth, is through investing in private companies where we can affect the outcome. I would not use the word control, because other than our firm, we don't have controlling stakes in private companies, but we do see private company deal flow, and we do have a pretty good understanding of the private markets, venture capital, and private equity. Key members of our firm come from those industries, and so our philosophy is we should always be earning in fiat. Fiat is money. Fiat might be a Ponzi, but fiat is money. I can go to the grocery store today and I could buy a bottle of wine and some meat and some bread and make a sandwich and have a glass of wine and pay for it in fiat. And so we must earn in fiat. We measure our business in fiat. We consolidate our books in fiat, and we report our earnings to the IRS in fiat. And we try our best to be law abiding within the regime and to change it from within to minimize the corruption that we see, which is one of the themes of Doomberg. We save in real assets because you can't get an interest rate at the bank today. And so, when we look at the savings portion of our net worth, we view that as the things we'll hand down to our children that will have the same or slightly better purchasing power than it does today. So if I go and buy, pick your favorite, 20 American Gold Eagles for $40,000, that's roughly the price of a car today, if you could get one before, there were no cars on the lots. We would view that stack of American Gold Eagles as we are passing down to our children the purchasing power of a nice vehicle with that stack of gold coins. And then the third element is investing privately, where we can affect the outcome using our skills, our network, and our ability to help the managers who have the agency to go and create value in the market, and to help them do so. And our private investments, of course, in a way, are a bit of a hedge against inflation, because if you select those private investments correctly and they produce things that customers will need regardless of all scenarios, and you could help create alpha in sort of a sweat alpha, as we would call it, a sweat equity alpha, then that works for us. And that's just our mechanism. It doesn't work for everybody. Many people have done well in the markets. We can't bring ourselves to invest in things that we know are overvalued on the hope that somebody will be foolish enough to buy it from us at a higher price in the future. And so for our mental model and the way it works for us, this is the three prisms that we've chosen to do.
And you've described yourself in another podcast as short-term pessimist, long-term optimist. You're a long-term optimist based on history and also technological progress. And you're a short-term pessimist because of the trajectory of some of our bigger institutions, and also because of natural resource constraints, which is something you've written quite a bit about. I'm wondering if you could introduce the topic of natural resource constraints and maybe supply curve generated inflation, and perhaps preview your upcoming piece, Farmers on the Brink.
We are indeed short-term pessimists. We believe that in the Western world in particular, we have elevated to political leadership a series of people that are shockingly uneducated in the things that matter and ethically loose, and that the leaders in charge of the nations that we would consider sort of the Western world, that composition matters and will manifest itself in poorer outcomes than would otherwise have been if we had better leaders. Part of that is because we have a political system that distills such people, because nobody with proper skill and good ethics wants to be in politics anymore, just because of the gauntlet of personal destruction that you have to run to get to the other side and be a political leader. And so you have this sort of what we would call still bottoms effect. All of the decent and intelligent and practical leaders go on to do better, more lucrative things and stay out of public policy. That's shame. That's a shame, and that will rear itself in the ways in which we're seeing it unfold today. But long term, we're quite bullish on the human spirit and on the desire for people to be free and to create value and to lift themselves out of poverty and to protect the well-being of their family. And as a consequence of that, if we can get through this series of crises without sort of zeroing out, then the rebirth is going to be incredibly bullish. And ultimately, one of the big themes of the Doomberg pieces is this focus on the laws of physics. The human endeavor is a constant, unrelenting struggle against the forces of entropy. We need energy to impose order on our local environment. Every human would like a higher standard of living. And your standard of living is nothing more than the amount of order you can impose on your local environment. Right angles don't appear in nature spontaneously. The residence that you're sitting in now, as we are having this discussion, is an enormous amount of stored potential energy. A lot of work that came before you, energy prices were paid to create this amazing environment that allows you to control your temperature and the humidity and the pleasure with which you can sort of get up in the morning and go to bed at night and live a happy, fulfilled life. All humans want more. All humans will work hard to get more, and ultimately will demand a political environment which allows them to flourish. And so the only real issue is the path function from here to there, and whether we do it intelligently or whether we make all the mistakes that we know we're making and have to fully suffer the consequences before we wise up and get a political class that is educated in physics, that is human first, and that is practical in their leadership and inspirational in their style. And we have a shocking absence of all of that, we believe, in the political culture today. And this is a bipartisan condemnation. It's not like we're team players and only pointing out the flaws of one side. There is no good choice for right-minded people today in politics. We think it is basically a uni-party system. And unfortunately, we're just going to have to suffer a lot before the people rise up and retake control over the politics of the nation.
You focus quite a bit on the supply curve and supply curve generated inflation. I think it's fair to say that you think inflation is here to stay for a while because of what's going on with the supply curve. Is that a reasonable generalization?
It is, although ultimately, when the rubber band is stretched too far, the snapback will be a collapse in the economy. We are, again, short-term pessimistic because of that. Again, going back to the laws of physics, if you constrain supply of the primary energy sources in the economy, or you have very poor geopolitical decisions in the same context, like Europe has by shutting down its own capacity to produce energy and outsourcing its energy needs to a dictator who doesn't like us. People have misconstrued our pointing out that Europe's energy policy is insane as somehow some kind of a support for Vladimir Putin. Is quite the opposite. The insane nature of it is that they are relying on him for their natural gas, for example, and shutting down their own nuclear power plants in Germany and increasing the dependency on a dictator who doesn't like us. And so we would say there's no chance that Vladimir Putin would have moved on Ukraine if he didn't believe he held all the energy cards over Western Europe, and he does. And we gave him those cards. And so shame on us for doing it. So ultimately, yes, both the nature of the domestic production and also the nature of the people you are outsourcing it to matter. They matter a lot. And the piece we're going to drop tomorrow, we're recording this on Friday, we're going to publish it Saturday, is a piece called Farmers on the Brink. We've spent the past couple of weeks touring the U.S. Midwest and reaching out to our contacts in the agricultural sector, and we have many, to get a full assessment of just how precarious the global food supply chain is and just what a dark period we might be heading into. And look, we take no pleasure in being right. We close that piece by saying that predicting global famine is one of the times where we've never been more certain in our prediction and more desirous that it be wrong. But we need to highlight that these decisions have consequences, and the consequences are real, and the people who will feel them the most are the ones who can afford it the least. It's going to be the poor countries who get crushed, and it's going to be the poorest among us in the Western world who have the hardest time getting through this crisis. And if you have any empathy at all, it's probably time to take a step back and to assess the decisions that put us here. There's no excuse for the Western world to be in the position it's in. We have enormous abundance in energy. We have enormous abundance in our capacity to produce a standard of living for everybody, and yet somehow we find ourselves in the position where we are at the whim of a dictator who doesn't like us. That's not the dictator's fault. That's our fault.
Farmers on the Brink. Are you able to say which areas of the commodity space that is going to focus on most?
You bet. Yeah, happy to. It's publishing tomorrow. It's free. Everybody could read it. So we start with fertilizer, which has mooned, trades like a crypto scam coin. Fertilizer is an absolutely critical input into farming. And not only is the price of fertilizer skyrocketing, but also the availability is shrinking, which the two often go hand in hand. And we're talking about nitrogen, potassium, and phosphorus, and all three of those are critical and needed, and all three of them are in short supply. And the price have doubled or tripled or quadrupled versus last year. And so, ammonia is basically derived from natural gas, and the price of natural gas in Europe and Asia has skyrocketed. Potassium is mined, and potash is the Belarus and Russia are the number 3 and 2 suppliers of potash globally. And so with the war in Ukraine, that has been turned off, and people have yet to really wrap their brains around just what a big deal that is. With phosphorus, China is the number 1 exporter in the world. And last fall, in a move that we highlighted in a piece called Starvation Diet, where we predicted famine for the first time, China cut off exports of potash mysteriously in late September, almost as though they knew what was coming in the Russia-Ukraine war and were preparing their domestic agricultural sector for it. And so from fertilizer, we moved to diesel. Those tractors on the farms aren't going to power themselves, and there's a massive diesel shortage and a diesel crisis that is out in the middle of unfolding right now, driven again by natural gas in Europe. A really great Bloomberg reporter, Javier Blas, wrote a fantastic piece that we quote in ours, showing how natural gas is critical to the refinement of oil into diesel, and European refineries couldn't afford it anymore. And so they stopped producing diesel at the rates that they were. And Europe is importing its diesel and its semi-processed oil precursor from Russia. And so now with the war in Ukraine, we're seeing a diesel crisis, and that diesel crisis is going to result in significant cost increases and supply challenges to farmers all over the world. Nobody will be spared. From there, we went into herbicides. The leading herbicide in the world is a very controversial molecule called glyphosate, known better by its retail brand Roundup. Glyphosate, when you look at the molecular structure, is basically an elegant and chemically modified version of a fertilizer. It's derived from ammonia and phosphorus, and so its price has mooned. It's gone up 4 or 5x. Its availability has waned. There's a global glyphosate shortage, and that is causing a scramble for substitutes, which might not work as well. Herbicides and fungicides in particular, because of the way in which modern agriculture works, are a pretty unique vulnerability. Let's just take Roundup or glyphosate. Monsanto, who's now owned by Bayer, they sell genetically modified seeds where let's say the corn that you plant is very resistant to glyphosate. And so you can use it to remove all of the weeds and use it sort of with abundance and not worry about damaging the crop itself. Well, that's a strength when the herbicide is abundantly available, and it's a critical weakness when it's not. And as one of the experts that we interviewed in preparing for this piece told us, it only takes 1 year of negligence to create many years of damage to a field if you let these weeds get out of control. From herbicides, we move into machinery, tractors themselves. The chip shortage that has crushed the automotive industry has done the same to farming equipment. And we tell the story of a series of farmers venting their frustration at a Republican meeting in Iowa. And the one farmer tells the story of missing a $40 emission sensor, and therefore his $250,000 tractor can't be operated. If the machines can't work or can't be replaced or can't be repaired, you hope that maybe the labor could make up for it. But there's a labor crisis in the U.S. in particular, but also around the world. And the number of open positions versus qualified people willing to take that job has been skyrocketing across all sectors. And agriculture is particularly hard hit in the U.S., not the least of which because that labor is physically intense and many people don't want to do it. And also much of that labor, which is kind of a dirty little secret of farming, has been through immigrant laborers who are on temporary work visas. And the vaccine mandates have thrown a wrench into immigration. And then we close the piece with a prediction of a potential future crisis, which we leverage from a really great account, Chai Girl on Twitter, which is an upcoming propane shortage. And propane is a really big deal in farming because it is used in the grain drying process. And if you can't dry your crops, they spoil faster. And some 80% of US crops are dried using propane because natural gas is not widely available in rural communities, which is where you find most of the farms. And so it's not the most uplifting piece we've ever written, but it's one of the most important. And And we wanted to get it out there. We have, large readership, as you said, and hopefully some policymakers and some influencers will see that piece and begin to think about, what are the best course of action we need to do to sort of begin to reverse some of that. Because if we don't, there's going to be a lot of starving people around the world, and that's a really deep tragedy.
And when you look at markets, they have to some extent anticipated this crisis, right? Like the price of food commodities and so forth have skyrocketed.
All the charts that we show in the piece, they might as well all be the same chart. They're all going vertical at the same time. So the price of diesel in Europe, or the price of fertilizer, or the price of glyphosate in China. This is a global phenomenon. These are, ultimately the products like wheat and corn and soy and oils, they're all globally traded commodities. And the price of many of those are just beginning to go vertical. But we view our job at Doomberg is to sort of be ahead of the news flow. We were calling for, the consequences of the phosphate. We wrote the piece about the phosphate export ban in China all the way back on October 10th. And here we are in March of 2022, and we're just now beginning to see the full depth of the consequences of that move. And so we are sounding the alarm on a global famine. And as I said earlier, we've never wanted to be more wrong in our lives.
I can't wait to read that piece. You wrote a piece recently called "Nickel in Front of a Steamroller," which it was also in the commodity space. And I'm wondering if you have a view on sort of the connection of the paper to the real, right? You have this phenomena that the prices of commodities is largely quoted in the futures market prices, which are sort of a paper price, but at the end of the day, there should be connection with the physical. And in nickel, that kind of broke down a bit. And I'm wondering if you have a view there. If you take the big picture view, it was kind of funny that the short squeeze phenomena happened during the COVID era in stuff like bad companies and bad stocks, right? It's much more natural for there to be a short squeeze in something real, like a physical commodity, where you're saying, okay, if you're going to sell these things to me in paper, then I'm going to make you deliver them in the physical. Do you have big picture views of the connection to the paper to the physical?
The core of the piece that you referenced, which we published, I think 10 or 12 days ago, Nickel in Front of a Steamroller, is that the LME is dead as an entity. The LME is over. The outgoing thumbnail for that piece was a rest in peace LME. Either a physical exchange promotes accurate price discovery and allows for market participants to set a true price for a commodity, or it doesn't. And the LME doesn't. It no longer does. It's the second time it has broken that trust in the past year. The first time was in the copper market on a much smaller scale. But the story we tell of in Nickels in Front of a Steamroller is, a very large and influential Chinese tycoon got very short nickel at a very bad time. And ultimately, the exchange and the banks who allowed him to take this enormous risk are doing their best to try to bail him out. It remains to be seen whether they will succeed. But ultimately, if you reduce it down to how the default waterfall was supposed to work at the LME is insolvent. And everybody knows it. All the key traders know it. You're going to see an exodus of volume and money off of those exchanges. And if at the highest level, the purpose of a physical exchange is to support efficiency and price discovery, and over the long term, those efforts should result in a lower price than would have been otherwise and a more orderly market that would have been otherwise. The fall of the key exchanges like the LME, because it is literally a walking dead entity in our opinion, the fall of those exchanges ultimately will result in the opposite. We will have higher prices than would have been and less orderly markets than would have been and more individual physical to physical trades. And something very similar sort of in the platinum palladium space, these prices exploded after that happened. And so, we wrote a piece many, many months ago about the silver market and the attempts of the Wall Street Bets crowd to squeeze silver. If they succeed, they won't get their money. That's what these exchanges have proven. They will shut it down, change the rules, and they will not allow retail investors, much in the same way that Robinhood did with GME and AMC. And look, we've written very skeptically about AMC's management, but we do believe wholeheartedly that Robinhood was insolvent, and it turned off the buy button on AMC and GME, because if they hadn't, they'd be out of business. And so they stole from retail to protect themselves. And the same thing happened with the LME. And once you know that those are the rules, you have to adapt to them. So we see a future of higher prices for commodities than would have been otherwise. That's different than saying they will be higher than they are today. And we see a future of a less efficient market with wider bid-ask spreads, where insiders with access to physical have much more market knowledge and advantage over retail investors. And the same thing will transpire in the gold market because of our attempts to sanction Russian gold. Either gold is a fungible commodity that is freely traded and liquid, or it isn't. And the consequences of it not being so are huge. And so the nickel is sort of a canary in the coal mine for what we see as a breakdown of physical exchanges and clearinghouses across the market.
Silver was always an odd one to target for a squeeze as well, because if there is any metal that is quite plentiful, it's silver, as it comes as a byproduct of so many others. It was always an odd target. In the nickel case, it was strange because the person being squeezed was a producer, right? Like they were.
Yeah.
That was odd. And you think of a commodity market, a futures market, as connecting hedgers and speculators, but you still think most of the time that the hedgers, the commodity producers, basically on the whole want the commodity price going up.
Yeah. So this is a section of the farming piece that we left on the cutting room floor because it had gotten too long, but that happens all the time. So if you're a farmer, let's say, or a nickel miner, and you want to hedge your forward production, well, you have to pledge margin. And ultimately, you are going short financially the thing that you're buying, and most times that works, except when it doesn't. And actually, the way it doesn't is when it goes against you and you have to keep pledging more margin. And then if you can't pledge more margin, you get liquidated in your position. But that happens all the time to mom and pop producers of farms, to small speculators or small mining companies. The exchange doesn't step in and save you when you've put yourself in a position where the market running against you causes you to not be able to meet your contractual obligations. A contract is a contract unless you're a Chinese billionaire tycoon and the LME has decided that you are systemic. And by the way, I don't blame the Chinese billionaire tycoon. I blame the banks and the LME for allowing this person to take systemic risk. Like, where are the safeguards? Where are the regulators? The reason why the LME is unwinding the trades, and we'll see if they're ultimately successful, I have a hunch that they won't be, is because this person is systemic. If it was Brandon and Doomberg, they would have rolled us and we would have been liquidated and we would be SOL, because the rules apply to us. But if the rules don't apply to everybody, then ultimately they apply to nobody. And that's why we predict the end of these exchanges, but it's their own fault. They allowed a speculator to get systemic. And then instead of confessing, recapitalizing, they intervened and changed the rules. And so think of all of the poor hedgers who was innocently, as you described, trying to secure a decent price for their future production and then got caught in a squeeze like this and ultimately were financially ruined. Well, that, the LME would say to them, too bad. But the LME didn't say too bad to this Chinese billionaire tycoon because they couldn't. And so ultimately, that's why we think it's the death of the LME.
Well, on the continuum between hedger and speculator, he was a bit far away from full-on hedger, because what he had was not what could be delivered against the contract.
And so he was ultimately a systemic risk to the exchange, and the exchange and the banks who enabled him bear the responsibility for it. And we've seen time and time again with GameStop and AMC, or with copper, or here now with nickel, that the big banks and the exchanges will not let you win. And so it is what it is. We view that sort of as an axiom. And so any trade that is contingent upon squeezing something is just not going to work. You have better uses for your money. Just reason number 50 that we invest privately where we can have some impact on the outcome. Because if your thesis is that you're going to, for example, create a run on gold physical redemptions, we put a tweet out the other day, which was kind of cryptic that some people got, but we said we suspect that the most interesting chart in the world would be the ratio of PHYS, PHYS divided by GLD. And I can explain that tweet because, PHYS is the Sprott Physical Gold Trust in Canada, and they claim to have 1-to-1 gold backing. And GLD, of course, is paper gold, and they participate in the futures market to recreate the synthetic price of gold. And if Vladimir Putin decides to back the ruble with gold, which is sort of a backdoor way of pricing oil and gold, we could see a lot of physical redemptions in the exchanges. And if we do see that, we suspect we'll see the same thing that happened to nickel. They'll change the rules. They'll stop trading. They'll, use the cover of Putin's aggression in Ukraine to suppress the price of gold. Let's imagine. Well, the Sprott Physical Uranium Trust should still trade in those scenarios, and how it trades when the exchange-linked products are frozen will be very interesting to see. And in fact, what we saw with nickel is very analogous. The Shanghai market for nickel kept trading. It was only the LME that stopped, and you knew where the LME was going to ultimately reopen. It was going to converge to the price where it was trading in Shanghai, which was around 38,000. And it did. All those limit down days were basically just a slow roll to get the price between the two exchanges to arbitrage again. Back to our comments about crypto earlier. These exchanges can and are arbitraged by powerful people with lots of money. And so we think the ratio of PHYS divided by GLD is a chart that may not turn out to be the most interesting chart in the world, but if it does, we're certainly going to take credit for that tweet.
Yeah, I have to consult with the broker on what the margin requirement for that particular one is. Yeah, you would think it would be quite low. So exchange, if you were taking the view that, okay, LME will survive and do well, and they just made a power play here, right? You can sort of, in a way, understand why they would make this power play, because for an exchange, short squeezes are very bad for business. Those are the only times when prices move insanely quickly, and basically evaporate margins and cause accounts to go negative equity and cause the exchange to be on the hook. So if they can somehow successfully make that power play, and people keep trading, like, it's good for the exchange, right? Because they've sort of told the market that using our power, we're going to eliminate the one scenario that's really bad for us, which is prices going straight up and a bunch of people going negative equity and us being on the hook.
That's a favorable interpretation, and I freely admit that that's a plausible one. It's not the one that we hold. We think that if the rules are uncertain, then fewer people will play. And if fewer people play, then what's the point of the exchange? So the ultimate test will be the open interest across these metals at the LME over time. And the LME serves a function, but it's not like the mining sector will stop operating if the exchanges are no longer operational. For the vast majority of commodity business, which is the field that we come from, they might use those exchanges as a reference point, but it's still transactions between companies. If I'm a consumer of nickel, I'm developing relationships with the miners of nickel. A very small percentage of the actual transactions occur on the exchanges. The exchanges are supposed to be supply of last resort, and the test that is the real price is supposed to be that you can redeem. But a meat packer is buying cattle from farmers. They might be referencing a beef product traded on a futures market, but in reality, the accounts, the invoices aren't going to the exchanges. The mine is sending the invoice to the smelter. And so that's the way the real economy works. The point of the exchanges is to reduce friction and increase inefficiency in the real economy. The death of the exchanges, or the need to recreate them with better and stricter rules, won't necessarily change the underlying economics of the real economy. It'll just make it occur with higher friction and less efficiency.
Do you think that the CME and the LME are going to have similar trajectories, or do you think that the CME, through maybe more regulation and lower position limits, higher margin requirements, is able to avoid some of the difficulties?
There is a window of opportunity for somebody to take over the bulk of the volume trading in metals from the LME. Who that is and how they do it remains to be seen. But if COMEX can do it, great. Or maybe somebody buys the LME with new management and new rules, and they convince the market that they're going to be far more trustworthy than the current owners. If the rules had been followed, I think things would have turned out differently. The core issue here is the rules weren't followed. And so if the rules don't mean anything, then why would they mean anything in the future?
It seems like many lawsuits will come from this. You have, I don't know, Cliff Asness has some fiery tweets about how somehow they were involved and might have lawsuits, but we will see.
The three fundamental truisms of life are death, taxes, and lawyers will make money.
I'm wondering if you can preview some upcoming posts. We have Farmers on the Brink coming Saturday. Your readers might be interested in what the future holds. One area that you've seemed to stay away from, that someone who is going by Doomberg might be expected to wade in, is Fed policy. Haven't written so much about that. I'm wondering where will the next month or two take Doomberg?
So we do actually write our pieces sequentially. It's not like we have a pipeline of pieces that we're working on. Now, the ideas sort of come to us, and then we turn them around in 3 to 4 days, and we publish about every 4 to 5 days on average, sometimes quicker depending on the news flow. We have written a few pieces about the Fed just to get that question out of the way. They're just far better people to opine on it than us, and so we leave it to them. It's a very complicated, nuanced topic that has a very much higher political input than economic. We have occasionally written about it, but it's just, as you mentioned, it's not our core strength. The piece we're publishing tomorrow has been the subject of a lot of work on our part. After that, we are having a look at this ongoing debate, sort of the Luke Gromen camp and the death of the U.S. dollar as a reserve versus sort of the milkshake theory camp, where because of its liquidity and utility, that the U.S. dollar in a crisis will become more prevalent, not less. There seems to be a lot of debate on Twitter about that. That's one thing we're researching. The big piece that we're writing actually for next week is when we announce our paywall and the product offering, and we're keeping our pieces free for the month of April, but then we're going to go mostly paid after that. And that's a really big deal for us. We've been working on this for more than a year. And so if I was to confess to you, the piece that has been swimming in my brain the most for the past week or two, once we got this farmer piece out, has been that piece. And how do we explain to our readers what we will be doing and why we're going behind the paywall and our motivations for it, and to try to convince as many of our readers to come with us to enable this to be the true work of our life, where this is the one and only thing we get to do every day, and we can sort of minimize the number of things we have to do, because doing Doomberg, being Doomberg, writing Doomberg, going on podcasts, creating Twitter content is the work of my life. It comes very natural to me. I love doing it. I wake up with a smile every day that I get to do it. And if there's a way that we can stack the deck to make it, as viable for us financially as the business of our life, then that piece is very, very important to me personally. And I feel the weight of the team, and we want to get this right. And so that's the big piece that we're probably going to publish next week.
I feel very confident that you're going to have success there. You do a monthly or so piece called The Work of My Life, where you highlight people that you think are enjoying what they do. Is that something that will likely continue?
Well, that's certainly the forum that we're going to use to announce the paywall. And so at the end of March, we usually publish those at the end of a month, where we sort of have been very authentically sharing our metrics and other content creators that we are modeling. And we have the content creator picked out for this piece. We have the arc of the story. I just haven't written it yet, but that's the one that has been soaking up a lot of my my allocated brain power here. And it's one that really I want to get right, because we have such a really great audience and very engaged, and we get I think the 5 pieces we've published in March this month have averaged over 90,000 views, which is really incredible. And so to the extent that we can earn as many of those people's business as possible, we want to do that. And we are capitalists at core, and many of our readers are. And so hopefully that your prediction that we will do well, it comes true. But, we're in I would be lying if I didn't confess that we were in the nervous doubt phase of this journey. You pour your heart into something for a year, and you allow yourself to dream a little bit that this is the thing you could do for the next 10 or 20 years. But until that actually happens, you sort of have a bit of nervous doubt. And so my editor likes to say that pressure is a privilege, and we're very privileged to be in a position to feel this pressure because we created this from nothing. And hopefully, it does work out, maybe not to the full extent of our dreams, but certainly well enough that we have achieved our objective, which is to make Doomberg the thing we do.
And I will refer listeners to your Twitter at Doomberg T, correct?
That's correct. At Doomberg T. You can think of the T as standing for team. And then you can find all of our writing at doomberg.substack.com. Like I say, we publish between 6 and 8 pieces a month. And we try to make every piece better than all the other pieces we've written. And that's our our value commitment to our readers. And like I say, it's been a real pleasure talking to you, Brandon. And it's been a lot of fun. And hopefully come back and do it again after we've launched.
Yeah, if you don't mind, I'll take credit for some of your paid subscribers next week and try to book you to come on again. Thanks so much, Doomberg.
Appreciate it.